Hey, great day, guys. It's your boy, Saquon Belcher. This is me taking action on Instagram. I'm a full-time real estate investor, and I actually have one of my guys. I call him like a teammate. Like I always say, find your tribe because you really need to have trusted advisors with you when doing the real estate business full-time. And I got my guy, my real estate attorney with me, Brian Elam. Okay, and today we're going to run through his story and also just some legalities of doing assignments, and also my favorite topic, buying property subject to. We actually just sent you a subject to deal that I got on a contract last week.
Great.
So I'm excited about that. And but look, let's get right into it. Introduce yourself, my brother.
Hi, I'm Brian Elam. I'm the managing attorney of Innovative Closing Solutions. We're a North Carolina law firm that works primarily with real estate investors.
Very, very cool. Now, like when you went to law school, did you think I'm just going to focus on real estate, or were you thinking?
Yeah, that's an excellent question. I'm an accidental attorney. I was going to go to business school in Carolina where I went to undergrad. And my father-in-law, well, he wasn't my father-in-law then. He was going to be my father-in-law. He said, have you ever considered going to law school? And I said, no, I don't want to be a lawyer. Anyway, he kind of talked me into it, and I took the bar exam, or not the bar exam, but the entrance exam for law school.
Yeah.
And ended up going to Campbell University. It's a small private school. At that time, it was way out in the country. Now it's in Raleigh. And I did focus my studies as much as I could on real estate while I was there.
Oh, wow.
My father-in-law was he was an attorney. He also did real estate development, and he did new construction flips.
Nice. So he was an investor.
Yes.
Okay.
Yeah,
and you're an investor.
Yes. So
okay, very cool.
So I was going to try and go into business with him. He died unexpectedly my last semester of law school, and so then I was a little rudderless. But I did. I came out and I just opened my own practice and really focused on real estate. So I've been practicing. That was in 1999. So I've been practicing for a little over 20 years.
Oh yeah.
And have always primarily worked in real estate.
Very cool. I like this. So you passed the bar exam on the first time?
Yeah. They don't
nice.
tell you what your grade is, so I assumed I passed it by one question. But yes, just pass, fail. You either make it or you don't.
And so what happens next? Do you join like a firm, or do you think, hey, I'm just going to jump into the business side of things, or?
Yeah, attorneys are kind of blessed in that we can come right out and just start our own business. And so I was going to practice with my father-in-law. When he died, it wasn't possible anymore. So I just hung my shingle, as they say. I just came out and started practicing on my own, which is kind of terrifying to think back because you come out of law school and you think you know everything. And
right.
I look back now and I realize I knew nothing. And so I had a lot of learning to do. Thankfully, I had some good mentors, some older attorneys, and just people too that invested in me and really helped to train and lead me.
Yeah.
And I made a lot of mistakes initially when I first began practicing. But was able to work through those and to kind of grow and learn.
So, but how did you find clients though? Because if you're new to it, when I was looking for an attorney, I was kind of looking for, the first thing I asked people was, hey, do you do assignments and double closes? Right. I'm trying to see what people know how to do. And from what I understand, in law school, there was not a lot on that topic. Or am I wrong?
No, very, very little, and certainly not even less on trust.
Yeah.
As they're used in real estate investing. So those were areas in which I had to really go through a sharp learning curve. One of the greatest things that ever happened to me was I got connected with Tony Robinson. He became a client of mine. He's a tremendous person, wealth of knowledge, definitely knows what he's doing. And he graciously just took a lot of time and invested a lot of time in training me on many of these things that I knew nothing about. And so that was around 2012. When he and I got connected.
Nice.
He got me connected to the Triad Real Estate Investors Association, and the rest is history.
Nice. Very, very, very good. Okay, let's. I want to dive into some of that. Okay, what he was teaching you to the investor side of things. Like when, as an investor, right? I want to go out and I want to buy a property. Okay. Now, I'm not licensed or anything, so do we go to you to get that contract? Do I type up what I needed to say, or do I write out something on a napkin? Like, what do we do there?
Yeah, all three of those are legally possible.
Okay.
So in order to have a binding contract, there's very little information that's required.
Yeah.
You have to know who the parties are,
Right.
who's the buyer, who's the seller. You got to know what the consideration is, what is going to be paid, what is going to exchange hands, and then the property that's covered. Really, it's kind of those four things are all you have to be able to go to court and enforce a contract. Now, obviously, that's not all that you would want it to say.
Right.
You want a lot more information in there. So it could be something that you came up with yourself. I'll be honest with you, it's kind of like pulling your own teeth rather than going to the dentist. I don't advise it, but it can be done. And you can go to a workshop. I have lots of clients who have gone and done educational training somewhere, and they buy a book or a packet of forms. And that
what do you think should be in a contract? If I'm writing my own contract, I got the seller name, my entity name, I got the date that we're going to close, how much we're going to buy the property for. What else should I have in my contract that helps me, the investor?
Yeah, after those kind of basic questions, which cover the essential terms, it's the what if questions.
Yeah.
What if you decide there's a better business opportunity over here, and you thought you wanted to do this, but now this has come up. So what happens then? Can you just terminate the contract? Can I walk away from it? Is there a monetary fee for doing that? So kind of those what if questions. What if the seller has $600,000 in judgments? We just came across this last week, and just really can't perform. What happens then?
Yeah.
Because you've got time and energy invested in that. Does the seller owe you some money for that effort that you put into the property? So it's all those kind of what if questions you want to tackle.
So that's a really good point right there. So I guess I never always thought about me as the investor buying my time.
Yeah.
But I never thought about that. If the seller wasted my time.
Yeah.
Or
or if you had an appraisal done or a home inspection, these are real costs that you spent. And then if the seller just can't sell you the property or chooses not to, breaches the contract.
For sure.
Yeah, you've got some real money tied up.
Okay, I like that. That's all you get me thinking. Okay. I honestly, every year since I've been with you, I add something. Like something will happen, and then I'll kind of like add like a little clause.
Yeah. That's a beautiful point, because when you're asking about the contract, we do have on our website, we have contracts available for our clients to use. But I say it's not set in stone.
Right.
So if you're going to have a contract that you use, do be open to learning.
Yeah.
Right. So, oh my gosh, I don't ever want that to happen again. I'm going to put some language in my contract to cover that.
Right. Now, with an assignment, do I have to have and/or signs, or that's just kind of there?
Yeah. So I hear this a lot, and it's taught in YouTube University and gurus that teach. They say always put that on there. I don't know what it is in other states, but in North Carolina, the default position is every contract is assignable,
right?
Unless it says it's not. So do make sure you read. If you didn't come up with, even if you did come up with your contract, make sure you've read it.
Yeah.
Because sometimes I will tell people what's in their contract and they're surprised.
Yeah.
We just had that happen today. A client called and said, "No, I'm supposed to pay all the closing costs." I said, "Well, in paragraph 12 of the contract you sent me, it says each party pays their own." So do read through and make sure the contract actually says what you want it to. But putting and/or signs doesn't really matter.
Nice.
It doesn't make a difference. So if you forget it, not a problem.
Amen.
If you add it, it may not make it assignable if the contract says it's not.
Okay, for sure. Okay, I like, because honestly, a contract can say two different things in two different places
absolutely.
and cancel out each other.
Yeah.
Yeah.
And then it's confusing. Right?
Yeah. Now with double closes, does it really matter if it's like, because I know I've done double closes where I have a purchase agreement and then I have an assignment.
Yeah.
Okay. And for whatever reason, the seller gets squirmy or the buyer gets squirmy, and I'm making $20,000 on this deal, and it's like, well, I don't want them to see what I'm making because I want the transaction to go through.
Yeah. Right.
Do I have to change up the paperwork or
is it, So having the duplicate but different paperwork can be confusing. It can be managed. I don't usually recommend it. So But it's tough because you don't always know exactly how you're going to dispose of the property or assign a contract.
Right.
You don't know what your options are necessarily the day you go under contract. You've got to do some property investigation, test the market, that kind of stuff. So I get it. I mean, I get that sometimes this is a fluid business and things change. Double closings, I'm glad you brought that up. In North Carolina, that changed just last year.
Right.
The state bar came out with an ethics opinion about how double closings are to be handled now. Essentially, it's like anything. We're still trying to figure out exactly what the state bar meant.
Yeah.
But as best I can determine, it really is just two separate transactions, completely separate. Two different closing attorneys, two different everything.
Okay.
And so, in one sense, I think that brings some clarity.
Yeah. Just so people can understand. Before that last year, how would a traditional double close go?
Yeah, so the rules before then were, and the way that we handled it was you could have the same closing attorney, but for instance, if you were the first purchaser, so you're my client, you're the investor, I'm going to represent you when you buy it, and I'm going to represent you when you sell it.
Okay.
But before, we could handle both transactions.
Right.
And the state bar, I think really their feeling was this is confusing because whoever you're selling the property to may misunderstand and think that I represent them when I don't.
Yeah.
And so we had written disclosures. We talked with people about this during those transactions, but maybe not everyone was as good as that in communicating it. So the state bar said, nope, we're not going to do that anymore. Now we're going to break it up. There have to be two different closing attorneys. So I can still represent you when you sell it, but I can't handle the closing.
Oh,
so I can represent you when you buy it, and I can do your selling.
That brings up a pretty good point because a lot of sellers, they don't know us. Like we're calling them over the phone and they say, hey, I'm gonna have my attorney, do the paperwork. But most people think, well, I can't use my attorney, but you can.
Yeah, absolutely.
Right.
Yeah.
I can have
and,
you
and
do
we
my
advise
docs.
it. I mean, honestly, we tell sellers right from the beginning, look, we represent the investor. You should get your own attorney. And so we communicate that to them right away.
Very cool, very cool. I love it. Now, what if I'm paying the closing? If I'm paying the closing costs, can he still use his own attorney and I'll pay for the?
Yeah.
How does that work?
Yeah, we would just get an invoice from the seller's attorney and just charge it to the buyer on the settlement.
Bam.
Yeah.
Bam.
So it's pretty straightforward.
I love it. I love it. So okay, great. So we got us a contract. We can write it out, or we can get it from our attorney. And I'm gonna get the link to link it below for everybody.
Yeah, absolutely.
Okay, so that way they can grab that. And then I want to, because everybody always has something to sell. Okay, it gets on my nerves because like when I was first getting into subject 2, I was told that it was a totally different contract than my original purchase agreement.
Yeah, I would disagree with that.
Yeah.
It's the same contract, just you need some additional terms.
Yeah, give me one clause or one term or a couple terms that I should add to my normal contract if I'm taking over payments from a seller.
Yeah. And you said it exactly right. So the difference between a subject to and an assumption is that you are not assuming their loan, you're just taking over their payments.
Right.
And so you always want to use that language because you want to be honest and truthful with whomever you're dealing with. That's where you get in trouble, is if there's ambiguity or if you're kind of hiding the ball. That's a big no-no. I mean, it's just going to lead to a lot of problems.
For sure.
So the two biggest things that I would say is it's still just the seller's agreeing to sell it and you're agreeing to buy it. The two different terms are that you're going to take over the monthly payments.
Right.
So disclosing that their loan is not going to be paid in full when you buy it.
Right.
It's going to keep going. We have an addendum.
Right.
We call it subject to addendum, and it has all that language in there. And the reason we like to do that right from the contract stage is because then we've seen where sellers, talk to Cousin Joe. And Cousin Joe doesn't have any money, but Cousin Joe says, well, I would have paid more for the house and I would have paid off your loan. And Cousin Joe never would. But he talks to the seller, and the seller gets what we call seller's remorse.
Right.
And then they start saying, well, you lied to me. This is unfair. And we just want to be able to say, no, right from the beginning, we told you this is exactly how it's going to work.
Right.
So that's kind of a big key term. The other thing is, and we do this in our subject to addendum, is sellers will ask us sometimes at the closing, well, how long is my loan going to stay out there? And
Yeah.
I just said, well, when's the last payment due?
Right.
Because that's all my clients promising is that they're going to make the future payments. They're not going to promise you because you don't know what the market conditions. I mean,
Yep.
my goodness, the economic condition we're in right now,
Right.
I would not want to promise a seller that I would have their loan paid off by the end of the year.
For sure.
'Cause who knows what's
Right.
going to happen to the market?
Agree. Yeah, I love that. I just the only thing I do is just say, hey, seller agrees to leave mortgage in place,
Yeah.
and then buyer agrees to pay mortgage payments until paid in full.
Yeah, exactly.
You know, very simple. You know, and I love that you guys made that suggestion instead of saying, hey, redo the whole contract. And I love the subject to addendum.
Yeah.
The subject to addendum is like perfect.
Well, and I
'cause
like it
breaks
as
it
a
down.
separate piece of paper because it sort of alerts the seller, hey,
Yeah.
this is something I need to pay attention to.
Yes.
It's not just buried in the contract. So
Right.
again, they can't claim that you were trying to hide the ball from them.
Right.
From a practical standpoint, with a subject to, the most important thing that you as the investor can do is have multiple exit strategies.
Yeah.
Because, and we may see this,
Yeah.
as interest rates begin to go up, lenders are going to want to get that old money in that's at the lower interest rates and re-lend it
Yeah.
at 2 or 3 times what the old interest rate was. So they're going to call these loans due. And that happens. It does. When you
Yep.
have interest rates going up, lenders call the loans due.
Yeah.
So you need to have a couple of plans of,
Uh-huh.
well, if that happened to me, how could I pay that loan off?
Yeah. And what do you suggest? Like if I bought a property I bought a property by taking over a seller's mortgage, right? You know, like the one that I got last week, it's like a 2.75 fixed rate. You know?
Yeah, they're calling that one in.
Right.
6 months rate.
I saw- when I saw it-
8% by the end of the year.
Yeah, when I saw it, I thought the same thing. I'm like,
Yeah.
shoot, in 3 years, you know,
Yeah.
they're for sure gonna
Yeah.
call Sawan and say, hey, give me my money.
Yeah,
Like, so
and they may.
what do you suggest that I do? What should I have in place? How can I exit the property without losing my shirt or hurting the seller's credit? What do you think we should do?
Yeah, and the hurting the seller's credit is the big thing.
Right.
Because that's what they're going to complain about. That's what they're going to sue you about.
That's what they're gonna sue you about.
Yeah, exactly.
Yep.
Is, hey, you told me you were going to make the payments and you
Yep.
didn't. And here's the real risk in a subject too. We've had this happen before with a client of ours that the client made every payment. As a matter of fact, it was set up on automatic draft.
Yeah.
But the bank was putting all the payments in a suspension account and not applying it to the loan
Yeah.
because they found out the transfer had occurred, and it created this huge mess. And so you do have to, you've really got to pay attention to your monthly statements, make sure the payments are getting credited like they're supposed to.
Yeah.
But let's say they contact you, they say, Sawan, we don't think you're our original borrower. We think you're the owner now. We're going to call the loan due. You could sell.
Yeah.
That's kind of the first go-to. That only works if the market is sound.
For sure.
Right?
Yeah.
You can refinance. So you could, and this is the hope, is that either through payments, you've reduced the balance on the loan, so there is equity there that you could then go to your bank and say, hey, I need to get a loan really quick on this, pay off the old lender.
Yeah.
Now you have your own loan.
Has that worked before? Because
Absolutely,
technically we're
yeah.
going to put it in a trust. So will they let me refinance
Yeah, it depends on the lender. So
Yeah.
some lenders will not. I'm trying to think of ones that will right off the top of my head, but a lot of your local community banks will because they kind of understand how that is. Or worst case scenario, they'll make you transfer it out to your LLC.
Yes.
And then after the loan, again, in violation of the due on sale clause, we can transfer it back to the trust.
Right.
But the solution is just to put it back into the LLC now.
For sure.
So,
Yeah, nice.
So that's a workable solution. The third one is to actually assume the loan, which
yeah.
is kind of like a refinance. But if you can't qualify necessarily for the refinance through another bank or anything like that, you have an opportunity to go to Wells Fargo or Chase, say, hey, I've been making these payments for 2-3 years without fail. Couldn't I just take over the loan?
For sure.
And if they agree to that, then yeah, you're good to go.
For sure. Actually, I didn't even think about that.
Yeah.
That's a good one. I always go in with extra, with multiple strategies. You have to, and that's why I don't agree with people buying them at the top. Like, how right?
That's
how can
scary.
you buy? Right? Don't do that. So I always like 20% equity.
Yeah. And I will say, and this is something that Tony Robinson taught me, if you have to choose which mortgage payment you're going to make. You make the subject to mortgage payment and not your own.
For sure.
And because you have made these promises to these sellers.
Yeah.
And you just don't want to get in a situation where you're reneging on that promise. You know, you can figure out your own mortgage, but you've made these promises to other people.
Let's talk about this. Okay. How can we protect ourselves in the deal? Right. We get it under contract. We have the right clauses. They get the seller addendum. I'll link to the seller addendum below as well. We have them sign the seller addendum. How can we protect ourselves from the loan being called due, communication with the seller, and all of those things?
Yeah, absolutely. So you mentioned purchasing them in a trust. That helps. There's not really any legal protection that it offers you, but there's some practical protection in that the bank is less likely with a transfer to a trust to think that a sale has occurred.
But why?
And call it due. Because of this thing called the Garden-Saint-Germain Act that does not apply to any of these transactions.
Okay.
But the bank doesn't know that.
Right.
You have no obligation to communicate to the bank what has gone on.
Yeah.
I have some clients that do. They send the bank a letter and say, hey, I bought it, and move along. And it has worked for them, but you're not obligated to do that.
Yeah.
You are obligated to be honest with the bank. So if the bank asks you a question, you need to answer it honestly.
For sure. Yeah.
And and I'll be honest with you. You know, a lot of these subject tos, especially if it's one where the seller's behind on payments and you're getting a reinstatement letter, you're catching up $3,000, $6,000, $8,000 worth of past due payments.
Yeah.
If the bank does call you and want to call a loan to you, you just remind them. Say, you're going to notice that when I took over this, you were $8,000 in the hole.
Yeah.
I caught it up. I've made every payment since. Are you sure this is really something you want to do?
Right.
And we've had clients that have had some success with that.
Nice.
And the bank says, we never had this conversation. Keep making the payments.
I love it. I've had that happen one time. It just, after talking to them, not talking to the person that gets paid $12 an hour, by the way.
Right.
Yeah, making sure.
You got to escalate it.
Yeah. Yeah, for sure. Now, we can put it in a trust. What does an actual trust look like? Okay, because when we're younger, there's like a negative stigma behind trust. Trust fund baby and things like that. What does a trust actually look like, and who puts it together?
Yeah, trust requires some property and 3 people.
Yeah, 3 people, okay.
Yeah, so there's the person who sets up the trust.
Yep.
That's called the settlor. There's the trustee. That's the person who kind of like a manager for an LLC or the president of a corporation. That's the person who takes care of the day-to-day business.
Yep.
And then there's the beneficiary.
Perfect. That's
the person who gets the financial benefit.
Perfect.
So those are the 3 people, and then there's just property. It
Right.
can either be cash, artwork, gold, jewelry, cars, real estate,
Amen.
which is really what we're concerned about. And so that's all that it is. A trust agreement, in essence, is a contract. It's a contract between the person setting up the trust and the trustee to manage the property for the beneficiary.
Nice.
So
Nice.
that's the very simple version of it. They are complex.
Yeah.
And I always say they are an advanced investing strategy. So you definitely want to get some training. There are all kinds of courses that you can go to in person or get online that teach you about trust. There's all kinds of tax implications. There's crimes, if for the trustee in particular, if you don't do things the right way, that can be a crime.
For sure.
So these are serious. I mean, you definitely want to study and learn about it, not just plow into it.
For sure. Yep, I love it. Now, okay, so great. We got the trust. That's one layer of protection.
Yeah.
Okay. What else can we do to protect ourselves in a subject to deal?
Yeah, you definitely want to make sure that the hazard insurance is set up properly. That
Nice.
is the number one trigger for the due on sale clause is the hazard insurance.
Nice.
And if it's not done properly, you have no hazard insurance coverage. So if it burns down, you get $0. The lender gets paid off, so they're fine. But then you've got a heap of ash and dirt.
Yeah.
So the biggest thing with the hazard insurance, and this is again where using the trust helps, is if we use the trust and we set up the hazard insurance properly, we're going to terminate the borrower, the former owner's hazard insurance. We're going to get a totally new policy that protects you and the lender.
Right. So no existing seller.
Yeah, even if there's an escrow account where the lender, pays that annual premium, and they just pay a little bit each month, or you pay a little bit each month, we want a whole new policy. And if you're working with a good agent, then they know exactly how to set that stuff up.
For sure.
And there is an agent that is on the board with the Triad RIA. His name's John Hamrick,
Yep.
and he really understands how to set up the policies.
I'm gonna put his link below. He's the one that does all of my insurance for all of my properties.
Yeah.
So okay, this is good. So making sure that we set up a new hazard policy on the exact same day that we cancel the sellers.
Yes. Yeah.
Okay, specifically on the day of closing. I like to do it at the closing table.
Yeah.
Just to go ahead and knock it out right then and there. I'll also get on. I'll become an authorized user.
Yes.
Out at the closing table as
Yeah.
well, and then I'll also get the login at the closing table.
Yeah, if they
as
have,
well.
because almost everyone now has internet access to their
Yeah.
mortgage, and if they do, and you can't see their bank accounts and things, there's all these things to navigate. But if they've got online login information, I advise sharing it.
Yeah.
So then the seller can log in and say, "Oh, yep, Swan is making the payments just like he promised me he would," and you can log in and make the payments.
Right.
And so you
Right.
keep up with the account and get all the tax documents.
Yeah, the gold, the key. I mean, because I had that little explosion last year with McKnight Mill. So definitely getting a login is key for sure.
If you can.
Yeah, for sure. Well, and even the state employees one, I couldn't get a login for that one, and I was making monthly payments on it, and it was paid off. They didn't tell me that it wasn't paid off.
Oh, you
until,
get paid that?
Yeah, like because I
gosh.
was just like paying extra trying to
Were
get
they
it paid off.
refunding the money to the borrower? Or?
Yeah,
Oh,
they were
nice.
putting it into his checking account. Right,
My goodness.
right.
Oh.
And I'm glad I finally asked one day, and they said, well, we're not supposed to tell you this information, but the last 3 payments have gone back into your checking account.
Were you able to get back in touch with the seller?
No, of course. They always leave. That's one thing about seller, subject to deals. After you've performed for people over years, they stop answering the phone.
Yes, that's true.
Because
they move or they
Right.
get a job in Wisconsin or whatever.
And a lot of times, because I try to check on them, they just start to trust me.
Yeah.
So they just like, oh, he got it. He's got it handled. No need.
That's a really good point, Swan, is that with subject twos, and you sort of have to run this in your numbers, you're going to lose money.
Yeah.
And I mean that exactly like what you just experienced. I mean,
Yeah.
there's going to be an escrow refund when the loan gets paid off and there's an escrow account. You may never get that, even though you are the one who paid into it all these years.
Right.
The borrower is going to think, "Oh, free money," and
Right.
it's spent. Right. By the time you catch up with them, it's spent. So you do have to kind of just be comfortable with, I'm going to lose some money on this, so it needs to be a good deal overall.
For sure.
Even with that money.
Has to be a good deal. Okay, now there was one scenario, and it was the first time I had ran into it. No, it wasn't the first time. But I bought the house over on Wood Green.
Okay.
And it was the day of closing, and this seller didn't want any money in particular. But I think it was $1,000 judgment. No, it was Quail Cove. $1,000 judgment had popped up, and so we needed the seller to bring the $1,000 to closing.
Yeah.
Okay. And I just want you to explain, number one, what a judgment is, okay, and then how, I don't know if you remember that how we solved that issue.
Yeah, absolutely. Yep. So I don't know if I remember that exact scenario, but I know the possible solution.
Yep.
So first thing is judgments are easy to go unnoticed.
Yeah.
And many times the person against whom there is a judgment doesn't even know it's out there.
Right.
There's a process called a default judgment, which just means, hey, you sued me and I never responded at all.
Yeah.
You win by default.
Yeah.
And maybe I didn't ever respond because I didn't actually ever get copies of the paperwork, or my wife got copies of the paperwork and was scared that I would know she didn't pay the credit card bill, and so she threw it away. So there's all these scenarios where people honestly just don't know.
Yeah.
Other scenarios we've seen are where people know that they got sued, but they don't understand it can attach to their real estate.
Right.
And we see that a lot with tax problems with the IRS, Department of Revenue. They know they have the tax problem, but they don't know it affects their ownership of real estate. So there's really 2 ways, and it's great if you're already in a subject to transaction, because you can acquire that property subject to the judgment.
Okay.
And just say, hey, I'm not going to make you pay that off unless I have to pay it in the future. So if you did have to sell it and pay that, and we can draft the proper paperwork to accommodate all that at closing. We've done that a number of times because judgments will eventually expire.
Right.
They do go away.
Yep.
So that if you're willing to absorb that risk for a little while, and then we can create the paperwork that says I'm not going to make you pay it unless I have to pay it.
Yep.
Then that's a good way to get through it. Or if there is some equity in there, if let's say your seller was getting $10,000 out of the subject to, there was a $2,000 judgment. We say, hey, sorry to ruin your day, but this did come up. You're going to have to pay that. So
wash it out the proceeds.
Yeah, you're only going to get $8,000.
Perfect. I love that scenario. Now, just so everybody knows, okay, how long does a judgment take to expire?
It's 10 or 20. That's the easy way to remember
Yep.
it. And the reason it is that is because, like so many things in the law,
yes,
it can be extended. So it's 10 years. If you want to get really specific, it's from the date the judgment was docketed, which is not when they were initially sued. It's when the judge signed an order saying, "Yep, you win."
Yep.
But if if it was filed in 2010, you can kind of rough guess that it's 2020 because the first 10 years. It can be extended by the judgment creditor for another 10 years.
For sure.
So it could go all the way out if they got sued in 2010, go all the way out to 2030.
For sure.
So some of these go a long time. But, if we're towards the end and nothing's happened with it, if we're 8 years in, that's probably a pretty low risk.
I love it. I love it. And I'm not like the riskiest, but I understand opportunity cost.
Absolutely.
I understand if I have equity, okay, if I have cash flow and I have an opportunity,
right,
then there's not much that's going to stop me.
Yeah, absolutely.
Yeah,
and honestly, it's not if there's no risk, it's not a business.
Right.
I mean, there is going to be risk in what we're doing throughout, just real estate investing in general, but certainly in these title concerns. But that's what a business is.
Amen. I love this. This is a good conversation. So now I want to get into a little bit deeper on the subject to docs, okay?
Okay.
Because the first time I did a subject to closing with you, you know that I had did 3 subject tos before that, and I didn't do any docs. I didn't take it to no attorney or anything like that. So I was doing it wrong. And the first time we did the addendum scared me, okay? But the seller still signed it. It was amazing.
Yeah, right.
But then at the closing doc, it was like 25 pages.
Right.
And I mean, it scared me. I was like, what in the world? It was.
Yeah.
Can you explain what's important in those docs? Because those docs are important. Honestly, I think they're after doing deals, after having subject twos for 2 or 3 years, I totally understand why they're important. So I just want to, what's in those docs?
Yeah.
Okay. What's in those docs?
And I wouldn't necessarily say that you were doing them wrong initially. You were just you were leaving a lot of risk out there.
Yeah.
Because you still owned the property and you still made the payments. I mean, It wasn't that it was wrong or like you didn't own the house, but it can be very risky because if we don't have things written down that the seller signed at closing in 3-4 years, none of us are going to remember it.
For sure.
And so they're going to make claims. They're going to get mad and they're going to make claims. And then we're going to say, golly, did we really tell them that? But now, if we have it written down, they're screwed. Now, I owe all the credit on my subject to documents that I used to Tony Robinson. He is the one who taught me all of that and really educated me on why we need those documents and what's important in there, what we're trying to get the seller to kind of not admit necessarily, but acknowledge that we've talked to them about these things. And then I've added to them over the years and tweaked them. So a lot of that's just from experience. Like I mentioned earlier, that I don't ever want that to happen again. So we're going to add something in our paperwork that deals with that. But really the purpose of the documents is to disclose everything.
Yeah.
And that is why it can be scary as an investor. Because you think, man, if I tell them the bad things or if I tell them the risks, they're going to run away from the deal. And some do. I will say, I have a saying in real estate investing, I've never regretted the deal I didn't get.
Right.
I have regretted deals I got.
Amen.
So, that, and so I try to kind of have that mindset of, listen, if I'm just trying to be honest with somebody and be upfront and say, you need to talk to an attorney, here's some risk, these are things that are going to happen, you're not going to own the property, you can't live there anymore, we'll go through all these things. And they say, this is not a deal I'm interested in, then I count that as a blessing. Right. Because they were going to be a problem in a year.
For sure.
Now we knew it before I put the money and the energy into the property, and then it becomes a problem.
Agreed.
So really what you're always trying to avoid, especially with the subject twos, are those misunderstandings that lead to lawsuits, because I have yet to see a real estate deal that was good enough that the lawsuit was worth it.
Yeah.
I mean, the lawsuits are beyond the money. I mean, and the money is astronomical.
Yeah.
Tens of thousands of dollars to defend a lawsuit. The mental energy that it saps from you. I have seen it tank people's businesses. They get tied up in one lawsuit and they can't think about anything else other than that. And so the rest of their business fails. And it's tragic, but it happens.
Right.
So we're trying to avoid that, trying to protect you from your future self.
Yep. Paperwork makes the paperwork.
Yeah, I agree.
That's for real. Paperwork makes the paperwork. You know, because I'm telling you, that's the limited power of attorney. Oh my God, that is a blessing.
Yeah,
That
it
a
is,
blessing.
because otherwise
That is
the
a
bank may never talk to you about
Right,
it.
yeah, right. And they simply just say, hey, well, just send us the, just send it.
I think
send
half
it
the
to
time
us.
they don't even read it.
Yeah, they
just
don't.
say, oh, Sawan sent me a piece of paper.
Right,
He must be able to talk to
And
me.
once they get the email, they're just like, okay, whatever you need.
Exactly. Right.
And it served me so many times. It really has. Okay, great. So as an investor, I can assign deals, right? I can do double closes if for whatever reason, I need to protect, the interest of the seller, buyer, or myself, right? I can take over payments. Now, is there anything that I'm missing? Like, what else can we do to acquire properties, from the legal aspect of things that are outside of those two?
Yeah, absolutely. So another way that people don't think about acquiring at least the ownership and control of the property is if the property is owned by an LLC or a trust, you can actually buy the LLC.
Yep.
And that there are many reasons to do that kind of thing. So some of your viewers probably know about seasoning of property. So if you're trying to get institutional financing, they want you to have owned the property for a certain amount of time.
Yep.
Well, if I bought a property in November in my LLC and you're going to try and get a loan on it as soon as possible, you can buy my LLC and you're seasoning tax back to when I first bought it because you didn't buy the property.
Boom.
You bought my company, and so it allows you to move backwards. Same thing with a trust. You can actually buy the beneficial interest of the trust, which is just like buying an LLC. It's buying the personal property interest, and there's some benefits, reasons to do that. The other thing, I do want to just circle back to assignments. This is a really big, like, third rail thing to understand about assignments. The North Carolina Real Estate Commission is very aggressive on investors using assignments, and many of you guys probably know about what happened in Illinois 2 years ago,
For sure,
where they limited the number of assignments that investors can do. The tension that people are trying to work out is that, yes, if I'm a buyer under a legal contract to purchase real estate, then I have certain interests, certain benefits and obligations that can be assigned.
Yeah.
That's just basic law, legal principles. However, some investors behave a lot like a realtor. And the Real Estate Commission is, rightly kind of territorial about that.
Agreed.
Look, we've got people who studied, took an exam. We have oversight over them.
For sure.
We need to regulate those. So if you're going to do assignments, don't act like a realtor.
Right.
Don't get paid like a realtor.
Right.
So don't say, I'm going to get a percentage of the purchase price. No,
Right.
really assess the value of the contract is what you're selling. And then the biggest frustration that we see with investors who do assignments, is that we can't communicate with them. Because once they assign the contract, they're out of the deal.
Yeah.
Right? They gave up the deal. Their only interest is getting paid. And truly, they could get paid all of the assignment fee when they assign the contract. I mean, that's legally permissible. So we have an assignment for our clients to use, and it actually includes language that would allow us to continue to communicate with them.
Yeah.
So you can add language into your assignment for that, and as long as
That's really awesome.
the assignee has agreed to it, then we're good to go. I mean, that's really what you're looking for. Is I can't give you any information unless you're a party to the transaction.
Yep.
Unless a party to the transaction has told me, hey, go ahead and tell Swan whatever.
I love it. That was a lot of stuff. So we need to make sure we have a clause in the assignment so we can continue to provide a service for the buyer. Because the way I run my business, I want to kind of be there to help them a little bit. Because most of the time we're like working with maybe someone who's just buying their first investment.
Right. And you're the contact. You're the connection between the ultimate buyer and the property. And so I definitely understand you being still in there.
Yeah.
But it is frustrating to a lot of people.
For sure. And I like
can't talk to you because of your paperwork.
Yeah, for real. But that's why the paperwork is the paperwork, for sure. Now let's talk a little bit about your portfolio. Okay, what kind of deals is Brian Elam like?
So I love buy and hold.
Yeah.
And people always ask me how many I have, and I never say. I just say not enough. So, otherwise, you're not going to be sitting here right now.
Right.
But I do like buy and hold.
Amen.
I've ended up with some raw land that I don't particularly. Raw land is very speculative, but
For sure.
I've ended up with some of that, and sometimes I own some that I don't mean to own.
Yeah.
But God's not making any more dirt, so
For
I'm
sure.
not very concerned on that. But yeah, I like the cash flow.
Amen.
And
why? Why over the flip? Okay, because you're
because I have a full-time job already.
Okay.
and flipping, for people I admire that do flips, it is a full-time job.
Yeah.
And anyone who does that would admit that readily. I admire the vision and the ability to take something, and you know what, the cities and the counties love it too, because a lot of times you're taking a property that's very run down, low tax base, and you have the vision. These flippers, they have the vision to come in there and say, this could be something really great.
Yeah.
And then execute on it.
Right.
That's awesome. But it takes a lot of time,
It
a
does.
lot of energy.
It does.
And I really just don't have the time and energy.
It does. I like it. So cash flow. Awesome.
Yeah, and I like the cash flow because I think real estate can be a really essential part of a future planning. When I'm not able, I know one day I'm not going to be able to think like I can now. And when that happens, I'm not going to be able to practice law.
Yes.
You have to be able to think.
For sure.
And think critically and think quickly. And I'm not always going to be able to do that. So I still am going to need money.
Yeah.
So you don't have to think much for tenants to write checks and mail them in. So, so I think it can be a really crucial part of future financial planning.
I love it, man. I love it. Well, look, let everybody know how they can reach out to you, and if you have any tools that they could help, or help them on their investor journey.
Yeah, thanks so much for that opportunity. Honestly, if you try to contact me, you'll get really frustrated. But I have a tremendous staff. And the reason you'll get frustrated is because I am trying to help people that have questions just like you. But my staff can answer a lot of procedural questions, a lot of basic questions. They can get in touch with me if there's some legal questions we need to address. You can always call our office at 336-793-1953, and that rings in every office. Or you can email my staff at orders, that's ORDERS, the @ symbol, then our company name, innovativeclosingsolutions.com. You can also check us out on the web, and you can submit a form on our website, which will get in touch with the staff. Again, that's just www.innovativeclosingsolutions.com.
That's for sure. And if you don't want to reach out that way, you want to try to get in front of them, go to the Triad RIA event.
Yeah, I try to make as many of those as I can.
Yeah, go to the Triad RIA. That's a really good way to get in front of them and ask them questions, because everybody's there to ask questions.
Yeah.
So,
and I would say, even if you don't want to meet me, which is fine, go to the Triad RIA event.
For sure.
I mean, I tell especially new investors, the number one thing you can spend your money on is becoming a member of the Triad RIA, because it gets you connected to other investors. It gets you into this whole wealth of knowledge that would take you years of mistakes to learn.
Yep, I just raised some money from your event the other day.
Oh, really?
Yep, I sure
Awesome.
did. Yep, I sure did. So, well, there it is. Look, guys, remember, you don't need all three to do a deal: time, money, and knowledge. You just need two to do you. Have an amazing day.